$200,000 on Bitcoin. The reason for that is pretty simple: supply-demand mismatch. Bitcoin produces about 165,000 new Bitcoin every year. ETFs last year bought about 800,000, and we think we'll buy more this year. When you have more demand than supply, you have the price going up. We think it goes to $200,000 or possibly more by the end of this year.
Hougan starts by addressing the short-term volatility of cryptocurrencies. It is not uncommon for crypto assets to experience daily, weekly, or even monthly price swings of 5%, 10%, or even 20%. He recalls enduring multiple 50+% drawdowns, but stresses that successful investing in crypto requires a long-term outlook. According to Hougan, those who have held on to their crypto investments for the past decade have seen their portfolios grow exponentially, demonstrating the importance of patience.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think that's fair from a short-term perspective. If you look at what crypto does over any day, week, month, it can be up or down 5, 10, 15, 20%. I've lived through multiple 50+% pullbacks in crypto. But what I tell people about crypto and sleeping at night is taking a very long view. The average investor I talk to about crypto has 1% of their portfolio in crypto, and they plan to hold it for 10 years. If you've been doing that for the past 10 years, you're actually sleeping very well, right? You're up tens of thousands of percent. So it's really about portfolio sizing and time in the market. That's how you get to sleep well. I think 10 years is a great time horizon. I think anyone buying crypto and holding it less than, let's say, 3 years is taking on a huge amount of risk. If you look at the history of crypto, there are multiple 1 or 2 year periods where crypto has been down, but there's never been a 3-year period where crypto has been down. And if you extend out, it's on this multi-year time horizon. People may remember other disruptive investments, like investing in internet search or investing in the growth of social or investing in the growth of mobile. All of those had huge volatility early in their growth years. And the same thing is true as crypto. So 3 years or more, I think you'll be all right. Shorter than that, yeah, maybe you'll have some sleepless nights. What the academic studies show is anywhere between 1 and 5%. Above 5%, you really start to impact the overall volatility of your portfolio, and it's hard to hold through those volatile periods. 1 to 5%, you'll be all right. If it drops significantly, it's not going to change your life. If you get the kind of returns we've seen over the last 5 or 10 years, it is going to change your life, but in a positive way. So I think 1 to 5% is the sweet spot. I think Bitcoin, for instance, is well on its way to being digital gold. And you can see that in the adoption you're seeing from endowments and pensions and the largest institutions in the world. But outside of that, I think it's fair to say there hasn't been that much quote unquote real world impact. But what there has been is a demonstration that it works. So for example, when I go and buy something at a grocery store, Visa charges a 2% fee for every transaction I have. I could also use stablecoins where it's effectively free to move money and it moves instantaneously instead of taking a few days. And so people wonder, if you have this new technology that can save everyone 2% on effectively every purchase they make, why hasn't it made the leap into the mainstream? And the answer is traditional companies aren't willing to accept it. Large financial institutions aren't willing to build on this technology because there's too much regulatory threat. So I do think now is game time for crypto. If you can't see real world impact from this technology over the next 4 years, it means that all the hype was not worth it. But I also think that criticisms that, there's no real world impact have to collide with the reality that it's faced an impossible regulatory environment. So I think we're going to see that real world impact much faster and a much larger scale than almost anyone anticipates. I think it's going to be transformative. $200,000 on Bitcoin. The reason for that is pretty simple: supply-demand mismatch. Bitcoin produces about 165,000 new Bitcoin every year. ETFs last year bought about 800,000, and we think we'll buy more this year. When you have more demand than supply. You have the price going up. We think it goes to $200,000 or possibly more by the end of this year. Blockchain is a disruptive technology that can be used in multiple ways. So one way it can be used is to create a money that's not backed by the state. And I actually think Bitcoin is well on that way. I don't know if you and I are going to buy coffee with it, but I bet you in 5 years, in our increasingly multipolar world, where countries don't want to settle transactions in dollars, and China wants to settle them in yuan, and Russia wants to settle them in rubles, and the BRICS are trying to set up their own currency, I bet countries are going to want to transact in a non-political currency. And the only non-political currency that can scale is Bitcoin. So I do think it's going to establish this sort of monetary use case, particularly in international trade over the next 5 years as we move to this multipolar world. But at the same time, blockchain technology lets us do things with money, property, equity, etc., that we can't do in the existing system, right? Wiring money on a weekend is impossible. When you buy something from a store, the merchant gets their money a week later. Bill pay takes 5 days. Stock settlement takes 1 day. This is ridiculous. This is an instant 24/7, 365 economy. So you do something like stablecoins, and it takes dollars and it makes them move at the speed of text messages. That's just a win. That doesn't mean that Bitcoin isn't important. I think it's enormously important. And I do think the establishment of non-state money is going to be a multi-trillion-dollar market. But I also think blockchains can speed up the existing financial infrastructure, which is, hasn't really advanced in 50 years. It's sort of crazy.
Hougan also touches on the phenomenon of meme coins. He likens them to a form of entertainment, similar to casino gambling or lottery tickets. While many meme coins lack fundamental utility, they thrive on community engagement and speculation. He cites Dogecoin as an example of a meme coin with longevity due to its decentralized nature and absence of insider manipulation. However, he remains skeptical about the broader meme coin market, acknowledging that while it is intellectually interesting, it is unlikely to serve any meaningful financial function.
Ethereum has middle child syndrome. So institutions love Bitcoin because we have this ETF, this structural supply-demand mismatch. And then the cool kids in crypto love Solana, which is an Ethereum competitor, but faster, cheaper, and it's the center of the meme coin casino, etc. And Ethereum is just lost in the middle. If you're an institutional investor, you're chasing Bitcoin. If you're a crypto native investor, you're chasing Solana or smaller assets. And there's no one chasing Ethereum. It's having sort of a debate on how it should structure itself going forward. I think it will eventually catch up. If you look at some of the things people are most excited about, stablecoins, tokenization, artificial intelligence agents operating in crypto, actually the most volume there is taking place on Ethereum. So eventually I think the fundamentals will catch up with reality. But right now, it's sort of suffering between this vice of Bitcoin on one side and Solana on the other. I think of meme coins mostly as either a casino or a consumable asset. In other words, people get consumption value out of buying a asset. People go to casinos, people play the lottery, they know they're going to lose, but they like the possibility of winning. And I think that may be part of this story. So Dogecoin is a meme coin with a picture of a cute dog. But what separates it from Trump coin, it's been around for 10 years. It has staying power. It has no insiders, right? Part of the problem with many of these meme coins, there's huge insiders that sort of take advantage of secondary buyers. Dogecoin has none of that. But does it have utility? I'm not sure. It speaks to something interesting, which is the growth of internet communities. I find it intellectually engaging, but I don't think we're going to be buying our coffee with fart hammer. Well, my base case is to own the whole space, which is to own the crypto assets and own the crypto equities, because they're doing slightly different things, but I'm bullish on the growth of the space. I do think that analogy to owning gold versus gold miners is a good one. There is Bitcoin and there are Bitcoin miners. Some people feel comfortable holding the real thing, and some people feel comfortable owning a company that generates profits and has a balance sheet that you can investigate, has quarterly statements you can review. And I think both are valid. The most important thing is sort of to get off zero The best case, you'll own both. My view is this like early stage internet search investing, when you could have bought Yahoo, or you could have bought Google, or you could have bought Ask Jeeves, or you could have bought any of these other names. But the right answer was to buy them all. In retrospect, it's nice to look back and say, I would have picked Google, but that was impossible at the time. You didn't know how things would turn out. As I look at like Ethereum versus Solana, my view is programmable blockchains are going to be much more important in 5 years than they are today. I want to own them all. So in my personal portfolio, I own some Ethereum, I own some Solana, I own 5 other of these programmable blockchains, and I just want to bet the field. If you forced me to pick one, if you said, Matt, you have to pick one and come back in 10 years, which is going to be bigger, I'd be very uncomfortable. I would probably pick Ethereum. I can explain why if you want, but I wouldn't know. I'd feel very uncomfortable. I feel much more comfortable just buying them all.
Well, let's make you uncomfortable. Why would you pick Ethereum?
There's this concept in crypto called the trilemma, which it's hard to build a programmable blockchain that's secure, decentralized, and fast. And what Solana has done is focus on being fast, right, and secure. Ethereum has sort of solved all points of this trilemma because it's solved the fast problem through the growth of L2s, or layer 2 solutions built on Ethereum. So to my mind, it's sort of figured out this trilemma. And so it could be the most valuable blockchain in the future because it's the only one who's really figured out how to have all 3 points on this trilemma.
But it's expensive, isn't it? These, like, they're called gas fees. Like that's
well, so there are 2 ways to process transactions on Ethereum. You can process things on the layer 1 blockchain, which is Ethereum, or you can process it on these layer 2 blockchains that feed into Ethereum. They're sort of like access roads next to a highway. And processing on Ethereum is very expensive, but on these layer 2s, you're talking about a penny or 2, soon to be sub-penny transaction costs. So those are very cheap. It's just a little bit of a mess moving around them right now, but I bet they'll figure it out. But, you know, I could be totally wrong. Solana could crush it. I think that's entirely possible. Again, from my perspective, just own the field. It's much easier. You don't have to waste your brain cells trying to figure this out.
For investors unsure about picking individual winners, Hougan advocates for broad exposure to the crypto space. Just as early internet investors were unsure whether Yahoo, Google, or other search engines would dominate, crypto investors today face uncertainty regarding which blockchain networks will prevail. Hougan personally invests in multiple programmable blockchains, including Ethereum, Solana, and several others, as a way to hedge against uncertainty. Please like and subscribe.